The S&P 500, the Nasdaq 100, that's what we're discussing here on the day. Now, overall, past basically a week and a half, 2 weeks, we've kind of just consolidated sideways. So we've gone over this quite a bit. Now, when we look here at some of the action, I do want to highlight, few broad points catch you up, right? Bull flag playing out 200 MA, bouncing, pushing up. This is the Nasdaq. Okay. And we zoom in and get about a 2-hour perspective when we look at really what's happening for the past week or so. You're just consolidating over resistance, giving you an idea where that resistance is. First was 15.4, then we broke over 15.6, and now 15.9, 16K, and that's just where we're kind of sitting at now. We're getting a little action going on throughout the day, zooming into that volume so you can see, and we're gonna talk about volume here, but it's important that we understand how we're moving about this area, right? So really giving you a viewpoint on the 1 hour, you can see we're getting that push to the downside multiple times. Every time buyers just push this back up. We spend no time at the lows, we just push back up. Now you can see obviously here we have that clear level where sellers are establishing themselves around 16.1, give or take. Okay, now that's really what's happening here. Now Nasdaq has been the leading index for us over the past really year. Okay, now something that we've kind of been seeing though is the Dow. Dow performing. This is the daily chart on Dow. Dow's only going up. In comparison, Dow to Nasdaq. Nasdaq's consolidating at highs. The Dow is pushing higher highs almost every single day, right? Something that we haven't talked too much about, right? Getting above the 200 SMA, etc., moving nice. ES, kind of, it is consolidating at highs, but when we look here like the hourly, you've had some better candles, right? Really establishing at those highs, right? NQ, little bit more sideways in my opinion. ES really doing its thing here. Now we're going to go into some of these leading equities and these indexes, but what's important to understand what's happening here. And it's kind of what's happened on the first half of this year, and now it's happening into the second half. We had a little bit of consolidation in between, basically, July into beginning of October, and now things have picked back up through October and now November. Your stair step, right, on this upside move, and the upside move at the beginning of the year. You push into that resistance, you mount above it, you consolidate, and you continue pushing. And that's the best case scenario for being bullish overall. And that's what's kind of taking place. And now we have to go into some of this data and go into what the Fed said today about this specifically. But before we do that, I ask you to do two things. Consider liking and subscribing. Helps out tremendously. Appreciate all of the support. The Discord link we're officially full. We have no more spots available in Discord. So I'm sorry when spots are available, most likely beginning of the year. You can check us out then. Also, too, if you are seeing, these indicators, these buy-sell levels, volume, everything that's happening in here as well, this is all chart prime. You can also see what's happening in here with our custom buy-in, or the volume indicator down here. Chart prime link is down below if you want to check those guys out. You can get access to all of our custom scripts that are there as well on TradingView. So let's go into what the Fed said today. Number one. I'm going to read what the Fed said, number one, and then I'm going to give you my opinion on that, okay? Because I think it's important that we have opinions out there as well. The Fed will likely be done raising rates. Fed Waller. Now, it's important to know Fed Waller he's a hawk, okay? Hawkish and influential voice of the central bank. What does hawkish mean? He's been a little bit more pessimistic across the board in comparison to all other Fed members, okay? Federal Reserve policymakers look increasingly comfortable closing out this year with interest rates on hold and the clock ticking on the timing of the U.S. central bank's first cut. They try to engineer a soft landing on the economy. We'll talk about cuts here in a second. Inflation rates are moving along pretty much like I thought. Fed Governor Christopher Waller, a hawkish and influential voice in the central bank, told the American Enterprise Institute think tank on today. I'm increasingly confident the policy is currently well positioned to slow the economy and get inflation back to 2%. Now, again, we can go over GDP expectations that kind of continue to get revised to the upside, signifying that we have kind of slowed, but it's ticking back to the upside, correct? And also reasonably confident on doing so without a sharp rise in unemployment rate, now at 3.9%. It was estimated this would have to get above 4%, and we just haven't got there. So it's very interesting. And again, we have to give an opinion based on this. We've never seen inflation come down back to healthy levels after such a rise without unemployment rising. It's a different economy, worth mentioning. and different things caused this surge in inflation. COVID, stimulus checks, etc., really stimulated the speed in which inflation grew. So it's important to realize that. If the decline in inflation continues for several more months, and this is where things are, I'm like, okay, why even say this? 3 months, 4 months, 5 months, we could start lowering the policy rate just because inflation is lower, he said. Again, I don't really agree with that. I think that they're sticking with their goal of 2% or really close to 2% before they cut. It has nothing to do with trying to save the economy. It's consistent with every policy rule. There's no reason to say we'll keep it really high. Okay, so that's the biggest thing there. Okay, an unforeseen shock could blow up the soft landing scenario, he said, and you love that. Okay, that's the main thing he said. Bond yields, etc. We know all this, right? Okay. Now, few things here. And also, too, bond yields fell after his comments, which again you can see going back here to yields. We are inching closer towards our target of getting back below 2022 highs on the 10 and the 30. The 10-year did break below the level we've been talking about. These are major signs, in my opinion, of this consolidation being very, very bullish. Personal opinion. Now, going back to what the Fed said, let's go over a few things. First of all, cuts. Comment on cuts. I already gave my opinion. I don't think cuts are coming until most likely around this coming summer, like July, June. So that does line up with 5 to 6 months time span there. But still, it's like, don't even talk about cuts. There's no point. Okay. The big bullet point is that they're not going to continue raising rates if inflation is moving in the right direction. I don't really care what your opinion is on it. If you're like, oh, well, inflation's still very high. My grocery bill is still high. Look, I'm gonna tell you this. The Fed does not care on your opinion or my opinion on inflation. They just don't. That's very important. The sooner that we understand that the market, the government, the Fed does not care about our opinions, all they care about is the data that they continue to tell you that they care about, PCE, CPI, PPI, right? The sooner you will become more profitable in the market. I always see people trying to assume what's happening, and when we assume what's happening, we typically look the asshole and we lose money. So again, stop trying to assume what's going to happen there. But I will say, I don't care what Fed Waller says. I care what Powell says about rate cuts, and he has been consistent with his saying of 2% is the goal. So that's not going to happen. Now, it's also worth mentioning, I do expect PCE, which comes out Thursday, to be very good. 100%. I expect it to be lower than expected. I expect it to continue this overall decline in overall inflation. Okay. Important to see here. It has nothing to do with trying to save the economy, meaning what investors have said, that they're going to have to cut rates because the economy is going to need them to, because we're going to need stimulus or anything along those lines. Again, I don't believe that they're going to raise rates to subside to big banks or be to, Bill Ackman or all these other investors that say we have to cut rates. They're not going to do it based on that. They're going to do it based on the facts. Okay. This is just my opinion. But yeah. So again, this was pretty good statements, right? The Fed spoke today, so that's what was there. Again, tomorrow we have a little bit of stuff coming out, but I don't really care about tomorrow. I'm far more interested in Thursday. PCE data. That's the biggest bit of data that we're going to get. Okay, so we know that. The good stuff is now out of the way. So a few things to be looking forward to right now. One, yields are moving in the right direction. You go to the daily chart here, you can see we're getting back below 2022 highs. That's good news. 30-year, you're getting closer when you want to see some more love to the downside here. The 5-year, obviously, already been broken. Same with the 2-year. Again, I'm going to tell you right now, that is as bullish as it gets right there. Number 2, oil, still pretty bearish. OPEC is kind of like doing their thing right now. They're arguing back and forth about cutting rate or cutting production, not cutting production. We'll see what happens there. Got a nice bear pennant down here at lows. I'm not trading oil, but I'm watching oil from the viewpoint of how it affects inflation. And as you can see here, nice bear pennant at lows below 200 SMA. Very interesting to see what's happening there and what will happen. The dollar. What's really funny about this channel is people get to comment whatever they want, and I try to give you the best answer possible. I try to answer questions all day long. But we always see people say crazy stuff like, Tyler, the market's going to crash and the dollar's going to pump. Well, actually, today was released, and it was not by me. Bloomberg Terminal, don't attack me, right? It's projected that in 2024, the dollar weakens against the yen and the euro. Why is that important? Well, we know when the yen has shown strength against the dollar, that has been a risk-on environment. Again, another tally in the bull. idea going into this market right now. And the dollar continues to tumble. You broke another massive key level. I posted that on Twitter. Again, I don't know what else to do for you guys. And again, if you're not following on Twitter, you're not in Discord, Twitter's going to be your best bet. You get to see every single chart, all of what I'm doing, if I'm being patient, if I'm being aggressive, everything in between. You can check it out there. And also, too, you're going to see some trades that I'm trying to enter into. Okay, so those are things there. Now, fundamentals, that's out of the way. What are my fundamental viewpoints? I'm bullish, right? I'm incredibly bullish. Right now, the biggest thing I can say is you're just forced to be patient here, right? The end. That's what you're forced to do, is you have to be patient. You have to wait to get this breakout. But the biggest thing is getting time on your contracts. I can only say that so much. You need to have time on contracts if you're trying to trade anything. Why? So you're not getting trapped and stopped out of these things, okay? That's the biggest thing to do. And I want to be a little bit transparent here, right? I want to be transparent. So yesterday, I ended up buying some NVIDIA, but I got stopped out when you broke below 176 or 476 today, okay? And I knew when I went into NVIDIA, like even though I had a little bit of time on that contract, I knew that this was going to be a risky trade just because of where it was at, how it was moving, right? I love it. I'm going to tell you right now, I think NVIDIA is incredibly strong. I stand by it. I just don't have a trade right now for it because you're sitting at lows, you're sitting at support, right? And you're just wicking back and forth, and the contracts are just still so volatile. Unless you're going like for March, June, even then they're still pretty volatile. And I just don't want to. I just don't want to buy those. I just don't. I'm kind of tracking my money in other areas so I can still make money if we break out. And I'm still up really nice on Amazon and Walmart. Those are the two things that are really carrying me as we speak. So that's things to understand. I love NVIDIA. I still think it's going to perform. But as of right now, I just have to be patient here. Okay, going into another thing too. I do want to talk about Cloud real quick. They had earnings. CrowdStrike, I think CRM reports tomorrow. So CrowdStrike reported they're actually dipping now. I told you guys yesterday I got out of my CrowdStrike position. So important to understand that as well. And I think I told everyone on the live stream as well. So I ended up closing my position. You're moving down just a little bit. Again, important to realize there's a difference between earnings, the initial reaction, and how you move from that. Again, I can only say this so many times. We've talked about it with plenty of other companies, right? I still think cloud names are going to be moving very well. For instance, ZS, great example. ZS here. So ZS came out yesterday. They reported earnings. They dropped, right? They opened the gap down to like 182. Upon that happening, guess what happens? Well, ZS gets price target raises across the board from various different funds, okay? And it pushes ZS back into local highs here, okay? Same thing being stated here. Just because the initial reaction is bearish does not mean the earnings were bad. So you have to actually dig a little bit deeper, right? So I'll have more on that probably on Twitter, so make sure you check out Twitter, or if you're in Discord, it'll be there as well. So CrowdStrike, still love them. Honestly, it's giving you a better opportunity now with the implied move from earnings out of the way. I like CrowdStrike, especially for like March, maybe even February. We'll see. I'll post a little bit more about that as well. CRM still moving up to the upside. Again, why is this happening? If CrowdStrike is dropping down after the earnings, again, because the overall consensus from these earnings statements on cloud is bullish. I don't know how else to say it, right? Again, CRM, for instance, we mentioned it back here at 213. You're seeing at 226 almost now. Again, still a lot of room to run there as well. Now, the biggest names I mentioned, Walmart and Amazon. I still think Amazon is a great opportunity, and you're kind of getting another opportunity here. It's like I've been saying, right? I went for June on my contracts on Amazon. I'm still sitting in those, just to let you know. We're sitting, I think, at the 155s, I believe. The 150s or 155s, pretty positive for June, right? These are the ones that I have. I've been in them for a minute. We mentioned those in Discord way back when, right? I'm pretty positive it's the 155s. Pretty positive. Those are the ones I mean. Those. It's one of them. Anyways, so that's the one I'm trading in that I have. They've been moving great. And honestly, I feel even when you dip, I don't care because I've stayed green, right? I entered those around 143, so you're sitting really nice. And honestly, every time we dip here on Amazon, I want to buy more. Telling you right now, I just don't want to over leverage my position there. Walmart also doing its thing, and I'm not even interested in closing this yet. Obviously, you're moving really nice. You're up like 10% on those contracts. Awesome, right? You're bouncing off the 200 SMA, which is what you wanted to see. Personally, I think you're going to run towards 163, 160 in a hurry. That's what I'm looking at here specifically. But I think you're going to push back into highs locally. It's important to remember Costco does have earnings in the coming days. I think it's next week to be exact. But again, I think Walmart has so much upside potential. Costco back at basically local highs. You hit highs at like 600. You're flagging. You look really good there too on Costco. So again, very, very strong. Now, the number one trade that I'm looking at right now is Apple. Okay, now Apple had some downside here on the after hours, okay? It's not because of them, it's because of one of their companies that they use for production on some of their stuff with the iPhone. Now, go into that in here in a second. What you're looking at here on Apple is the fact that you're holding, and you were doing this on the daily before the after hours, but you're holding above this previous high that you established back in August and September, okay? You're holding above that, right? You had your earnings, you dropped, you pumped up, and then you dropped again, okay? That's what happened there with Apple. If you hold this, it's incredibly bullish on Apple. Incredibly. That is the definition of a very bullish structure. Bull flagging on top of that, very strong. And on top of the 90 EMA on the daily as well. Right, I can pull that up real quick so you can see. Yeah, we're on top of the 90 EMA as well. So Apple, absolutely love it. Looks very strong. Looks very good. You want to see it hold above basically 189.9, 190 on the daily time frame. So far it is. We'll see when we open up tomorrow as well. But that's what we want to see. I see upside into 194.5. And then ultimately, I'm not going to lie to you guys, I think Apple runs back into its all-time high. I'm going to tell you right now. If I had to show you a chart that was similar to Apple in the slightest, it would be something like maybe Microsoft, except Microsoft can obviously take more advantage off of the AI and things happening in that viewpoint. Apple really can't, but I will say very strong name, impressive. I could argue that Apple's a more impressive chart than Microsoft was. So anyways, that's what I'm looking at there. I love Apple. If I'm looking at this, I'm going dated as well. You need to look at contracts for yourself. People always ask me, it's like, Tyler, are you getting in? Are you getting out? This, that. Guys, you got to do your own research for yourself. You got to understand how these contracts move. You got to put in, I'm sorry, I know it's a crazy world we live in, but you got to put in the work for yourself to understand how they move, right? So a trade for me might not be the same trade for you, right? It just might be too expensive for you, but you can still get very good opportunities on Apple, giving you a viewpoint. Let's go to Apple real quick just so you can see. So we're going to go to Apple. Okay, we're going to go to bullish structure. Let's make sure we have the day right. So let's just go to something like June, for instance, right? We're going to go to bullish June 2021 or 24 for the 21st, okay? Now, if you want to go right out of the money, like 195s, even at the money is nice, $15, and it's basically pricing on another earnings call as well. 12.55 at 195, 15.45 at the money. Now, you need to understand how those contracts move, but the number one thing you're going to do for yourself is protect yourself on those, okay? That's very important to understand that you're protecting yourself on those contracts when you have time. And that's the biggest thing I'd say here, right? If I'm trading Apple, you're at a key level. You want something that's not going to move crazy. If you move down $1.50, right? You want something that's you're going to be able to run back into, highs of 198, 200 potentially. That's the winning opportunity here, right? And guys, again, if you aren't using Options AI, if you're not tapped into Options AI, the link is down below. It's the only broker that we're using here on the channel anymore. Again, we love what they're doing. And again, it's something that we actually can work on with Options AI to help improve them because we're working with the CEO and everyone in that company as well, which we're super excited about. But anyways, check them out. If you use the code down below, you get free, I believe, commissions for the first month. So congratulations. The link is down below. But that's essentially what I'm looking at right now, right? I'm not getting too crazy. I'm not looking at too many names. I'm not overcomplicating things. I say this all the time, right? You have some really good names in the market, but I just want to say something right now. And also Tesla had a crazy day, absolutely crazy. If you were in the newsletter, kind of traded pretty perfect on your key levels. Your 232 level, you just kept bouncing over and over. You're actually making higher lows off of that level there, right? Making higher lows, great structure there. Just the one thing that I had to continue to say is I'm just not looking to day trade. I can only say it so many times and people are going to get frustrated if you're in Discord, and I get it. You want to see a shit ton of trades. You want to see me go crazy and make, the 30%ers up and down all day, every day. But the reality of it is, when I'm trading, guys, I'm going to be totally transparent. If you're having a slow session, a slow past 2 weeks, join the club, right? When indexes move like this, I just don't do much. I really don't, right? I am in and out, through and through. I base my trades on indexes. It keeps me safe. It keeps me sane. And ultimately, it's what works for me. So I encourage you guys, make sure you know what works for you and keep on that same strategy. Don't keep tinkering or twisting your strategy, right? Now, Obviously, trading in 2023 is far different than trading in 2020, right? 2020, everything just went straight up. And you could argue 2023, everything went straight up as well. But, there's differences. You have to be able to adapt. But you shouldn't be adapting every week. I'm just going to tell you that right now. Things shouldn't be changing in your strategy every single week. So, this is what's been working for me. This is how I'm attacking the market. And again, I have dated positions. I'm patient. I'm waiting on these names. I have confidence in the names I'm having. And we've had some success for the past few weeks as well with Cloud, Meta, Affirm, NVIDIA, Tesla, inverse head and shoulders. I can go on a laundry list, AVGO. So there's going to be times when you have to slow down. For me, that's right now. And I hope that, sharing my personal experience and what's happening here with me in the market right now. Enjoy. Have a good one. And if you're having a slow time, again, welcome to the party.